Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin and we're going to talk about market cycle theory. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So, as you guys know, we do occasionally discuss market cycle theory. There's tons of different theories out there. So, I wanted to give my thoughts on where we currently stand. Many of you have noticed that a lot of my videos over the last few months have been increasingly bearish. We talk about the bear thesis all the time. I talk about there's a high probability that we're going to capitulate down to the 200-week moving average. You know, we've outlined why things are bearish. We're below the 50-week. We're now below the 100-week. Historically, that means we go to the 200. So then where does that stand with market cycle theory? In the past, one of the things we've talked about is the idea that the cycle could ultimately lengthen from the market cycle bottom based on what has historically happened. However, given the macroeconomic uncertainty that we are facing right now, given the hawkish Fed, given the fact that we are below a lot of major areas of support that you would assume would hold as support during a bull market, I have to say this does not look like a bull market. I mean, this does look like a bear market. I don't think this is just one of those 3-month bear markets like we had back in the summer of 2021. I think we are in a longer, painful bear market right now. This is what I think, okay? And I mean, I have to say what I think, right? I mean, if the market presents something that is different from what you initially believed, you have to be willing to pivot, just like the Fed pivoted to being hawkish, okay? So with that in mind, I would argue that the market is more likely to remain bearish for months to come before we're ultimately going to see a sustained push to higher prices. This is why I say this is a time for stacking cash, to stay clear of altcoins for the most part, and to really just focus on Bitcoin, maybe growing that, DCAing into it as we go down. That's probably honestly the best strategy for the time being. So we've talked about this a lot, right? We are in a bear market. Bitcoin has been in a bear market. We are getting rejected by the bull market support band. Therefore, when looking at it like this, there's really no good reason to say that Bitcoin should see new all-time highs without going through a longer reaccumulation phase. Okay, I mean, you go look at the bull market support band. We're just getting rejected by it. This is indicative of a bear market, like we saw in 2019 and like we saw in the second half of 2019 and early 2021 or in 2020. And then also in 2018 and in 2014 as well, right? It's just, this is indicative of a bear market. And when you're in a bear market, you need to understand that the rules change, right? Buying the dip does not often work out, especially on altcoins, because a lot of altcoins will not see new all-time highs, right? They just simply won't. Now, to sort of reflect on this cycle and discuss where we currently are, I do think it's more likely that Bitcoin's going to remain bearish than go put in new all-time highs this year. Okay, that is where I stand. I have to accept what the data is telling us. One of the things that I've mentioned many times before is that, you know, and this is something we mentioned in 2019 as well, is when you look at things like, say, the 50-week moving average, what usually happens after a parabolic rally by Bitcoin is that it gets a dead cat bounce off the 50-week and then ultimately capitulates back to the fair value regression band fit to quote-unquote non-bubble data. The same thing happened here, right? We got a dead cat bounce off the 50-week before capitulating to the fair value regression band fit to non-bubble data. What's weird is this cycle, we bounced off the 50-week and we technically put in a new all-time high, but now we're still on the same path of going below the 50-week and heading back down towards this regression band. So with that in mind, you know, I've had a lot of people say, well, you said it was going to be a double peak cycle. It was, right? It was a double peak cycle. It's just not the one we were envisioning, right? This was a double peak cycle. Peak number 1 and then peak number 2. I will remind you, I do not trade market cycle theory, okay? I just trade the risk levels for Bitcoin. When we went to the highest risk levels over here, I took profits on Bitcoin and I reaccumulated down here in the summer. And then over here, I didn't really take any profits. I did sell off some altcoins, but I'm still holding on to my Bitcoin. And you know, I think the hard part about this is that we sort of just went right back up to the same prices that we were already at, right? The same prices we were already at. And so it makes it very difficult for a long-term investor who was buying over here and who sold up here, if they then reaccumulated over here, which is what I did, to just sell it just a few months later. It's hard for a long-term investor, I think, to do that. And you can actually see that reflected in things like the hodl waves for Bitcoin. And if you go look at the hodl waves, you can see that long-term holders really took a lot of profits during that first parabolic rally, but not so much during the second one. I think a lot of long-term holders were in the same boat that I was, right? If you're going to take profits, you would have done it the first time it went to 60K, not the second time we went to 60K, because you would have been accumulating for years and then waiting for that to occur. So, I think we find ourselves right now at a time where Bitcoin did bounce off of the 50-week. We had a dead cat bounce, and now we're below it. And so, as far as I'm concerned, this was the peak. I mean, okay, so this was the actual peak at 69K. This was the actual significant market, like the top of the market, right? This was the absolute top of the market, 69K. But this was the actual significant peak where ever since then the market has been weaker. You look at a lot of things like the RSI, right? Go look at things like the weekly RSI, and it's been in a downtrend since January of 2021, which, by the way, is weird considering that in 2017 the RSI on the weekly hit a top actually at the top, not 4 months before the first top, and not more than half a year, 10 months before the actual top. So perhaps the downside, we probably still have a few more months of it. But I will say that from a lot of perspectives, I don't know how we can look at this and say that whatever comes after this is not a new cycle. Okay, I mean, look, the one thing we might be able to hold on to is looking at the risk levels and saying, well, in 2013 we came back down to the 0.3 risk band after going back up to 0.4, so sort of in this range right here, which is where we currently are. And even if that happens, it still is somewhat difficult to say that, to at least rationalize that being the same cycle. I mean, I think if we sort of hold above 30K, you could still argue that it is. But I would argue there's actually a fairly good chance that we end up going below 30K and going below the summer lows. My thinking right now is that best case scenario, Bitcoin holds the summer lows. That's best case scenario. And one way to visualize that is to maybe look at something like this. I sort of drew these longer term trend lines on the logarithmic regression chart, sort of trying to fit it to this stuff. Best case scenario is that Bitcoin holds the summer lows, okay? And somehow we just sort of hang around in this area, and then ultimately we trend higher. That's sort of best case scenario. I think a more realistic scenario is to assume that we're going to go to somewhere between, maybe 20 to 25K is a more realistic scenario, which is around the fair value. And that's also where the 200-week moving average is. And then I think a worst case scenario, at least for me anyways, would be closer to below 20K, like 16 to 20K, somewhere in that area, corresponding to, say, the 300-week moving average, which, by the way, is already over 16K. So theoretically, if we were to go to the 300-week moving average in a year, I mean, it could already be over 20K by the time we get to that level. So as I said before, for me, I think worst case scenario is 20K plus or minus a few K. So the worst case will be the minus part, right? If it goes sub 20K would be worst case scenario. I think it's hard, because even for the people that were looking for the 4-year cycle stuff, a lot of them were hoping that we would go to, 100K or 300K for that matter. A lot of people were assuming we would go to much higher valuations, and we just never made it there, right? We just never made it there this cycle. So, it has become fairly evident to me, as I've said over the last few months, that we are in a bear market. You're better off stacking cash, staying away from altcoins, and just kind of accepting it and being patient and then waiting to ultimately trend higher. But in the short term, I don't think we can say that the most likely path forward is for us to go put in new all-time highs this year. I don't see it happening. I do not see Bitcoin putting in new all-time highs this year, okay? There's no way I can look at this and think that is the most likely path forward. Not only because of the chart for Bitcoin and sort of looking at this chart and saying, you know what, weekly RSI looks terrible. We technically hit the top of the logarithmic regression band, which is what we said we needed to do before a bear market would start. We technically hit it. We've been in a bear market ever since by a lot of factors in terms of like the return on it, or the RSI, the ROI as well. A lot of different metrics you could assume that we've been in a bear market ever since. And so you look at this and I just say, well, we're below the 50 week like we've been before. Normally after going to that, you go to the 100 week, and then after that, you go to the 200 week. It's as simple as that. That seems like a more likely path to me than for us to just bounce here and go put in new all-time highs. It seems like a more likely path to me. Okay. Again, I think that best case scenario, we hold the summer lows. This is best case, is that we hold 29K would be the best case scenario that I can imagine. If you look at things like the bull market support band with regards to the regression bands, what you'll notice is that once we really start holding it as resistance, we continue holding it as resistance until that regression band makes it back to the fair value. Okay, fit to non-bubble data, right? Resistance, and then we don't really get back above it in any sustainable way until we go back to the fair value. The fair value right now, fit to non-bubble data, is currently at around 21.7K. I mean, it's moving higher, but if it takes us, let's say, a while to get to it, we might not get back above the bull market support band until it's closer to, say, 25 to 30K, right? Like if we come down here and then have to get back above it like that, and then we rinse and repeat. So I want people to to recognize that you should be willing to understand that the markets, like when the markets change, right? If the markets are telling you something different from what you initially thought, you have to be willing to pivot. And I can't look at this chart and say that it looks bullish, right? It doesn't look bullish at all. And this is why I've been bearish since we dropped below the bull market support band again, right? And furthermore, you go look at things like the NASDAQ, that looks awful. So, I mean, if you think about everything together, right? The NASDAQ looks awful. The S&P looks awful. The dollar's in like a parabolic uptrend of which it might continue going higher for quite a while. Like, I mean, I think you could argue that the dollar might continue going up potentially until it gets all the way, 113 or something potentially before it actually slows down. And then you also look at soaring inflation and recognize that the Fed is having to be, they have to be hawkish here because they have to fight inflation, and knowing that stock markets don't generally give good returns during high periods of inflation like this when it's going up, I have to look at this and say, all right, the Fed's not going to pivot until inflation gets under control, okay? And it's going to take a little bit of time for inflation to get under control. Therefore, we might as well assume that we are in a longer term bear market, and we have to wait for things to kind of just work themselves out for a while before we can ultimately trend to higher prices. So I think that's where we currently stand. And I think that, the reason I've been so bearish for the last few months is because a lot of the metrics that I would normally measure, like the 50-week SMA, I mean, we're already below those things. So, and this is one of the things that you could argue would sort of separate one cycle from another is, when do you go below the 50-week, right? When do you go below it? That's a new cycle. We're below it. So, I think that the idea that the cycle lengthens, I think that it actually has a fairly difficult path if it's going to be proven correct. I think it's more likely that the market remains bearish for months to come. Just have to, kind of say it how it is. And that's how I currently see the market, right? I mean, I know we're currently at 35K, 36K, but I mean, we could easily go below 30K. Bitcoin could drop another 40, 50%. And this is why we keep saying, look for capitulation, look for volume on a capitulation. And I keep saying the same thing, right? Like, I can't get bullish on Bitcoin until we either somehow show strength or we see some type of capitulation with a lot of volume. We just haven't seen that. We haven't seen it. We saw it in March of 2020. We saw it in May of 2021. We saw it here in December of 2018. We have not seen any real volume in a long time, not since May of 2021, not in a single capitulation wick. So I cannot be overly bullish until that happens. Now, I mean, the few counterpoints that you could make, one again is the risk level. And then the second one, I suppose, would be the fair value of Bitcoin fit to all data. And historically, as long as we're above that band, then you could argue we are in the same cycle, okay? Just like in 2013, we actually went to the bottom of the band before ultimately going much higher. The bottom of the band today would correspond to approximately $30,000. So again, I would say, as long as we hold the summer lows, you could still argue that it's the same cycle, right? However, I want people to understand you should not trade that. Like you should more so trade the fact that the markets are risk off right now. The dollar's in an uptrend and Bitcoin is falling below all of these major areas of support. The only thing it has going for it right now is that technically it's putting in a higher low, but all it takes is for Bitcoin to go to 34K for that to be completely out the window. And this is why I've said before, the bear market won't be over until the last bull admits it's a bear market. And I still firmly believe that there's too many people that still think that this market looks bullish in the short term for us to really sustainably go higher. So my thoughts are this, to just sum them up. My thoughts are this. Bitcoin, best case scenario, we hold the summer lows, meaning we hold 30K. I don't really see how Bitcoin's going to get out of this stuff without eventually retesting the summer of 2021 low. So that's best case scenario. A more moderate scenario, a more reasonable scenario is holding somewhere between 20 to 25K. And the most bearish scenario that I think is at least somewhat plausible would be for us to go slightly sub 20K under some type of major capitulation. This is what I think. That's how I think the best way to lay it out would be. And I think that judging by a lot of metrics, we're probably closer to a bottom than a lot of people think we are. I don't think it's going to be tomorrow or anything. But in terms of looking at things like the relative strength index, when we're already in the 40 or just below 40, normally you're within a few months of a major bottom when we get to these levels. So I could see a major bottom coming within the next 4 to 6 months potentially, and then for us to slowly grind higher. But as it stands right now, I can't sit here and say that the most likely path is for Bitcoin to do something like this. Okay. The thing I said in 2019 is that the highest probability for me for Bitcoin to go to 100K would be 2023. Okay, the highest probability would be in 2023. Even if that happens, right? Even if Bitcoin goes to 100K in 2023, let's suppose it does something like this, and we capitulate, and then we see some type of rally out into 2023. I still think you should call that a new cycle, right? Like you would call that a new cycle even if we do make it to 100K by 2023. But I will say some things to keep your eye on in terms of another bull market is normally the bull markets occur when the dollar tops, and the Bitcoin bull market tends to occur 1 year later, or the top. So for instance, the dollar topped in December 2016, and we know Bitcoin had a top in December 2017. We know that the dollar topped in March of 2020. We know that Bitcoin topped in April of 2021. I mean, it had the dead cat bounce to 69K later, but we know that that's what happened. So whenever the dollar tops and starts to head back down, that could be a good indication that we'll see a major peak by Bitcoin 1 year later. But even if that happens, even if Bitcoin does, let's say the dollar tops, let's say late this year, and then starts to go back down, if Bitcoin continues to stay in a bear market, you're better off just assuming it's a new cycle. Okay, so I will say I don't see new all-time highs this year. Okay, I think we are currently in a bear market that's going to last many more months. I think that we'll get to the point where we'll find a bottom and then we'll slowly start to go sideways, and then we'll build off of that like we've done in the past. But as it stands right now, the market still looks fairly bearish. We've outlined the bearish thesis multiple times. We've outlined the strategies that you should be taking, not financial advice, of course, to navigate bear markets. And we just kind of have to call it what it is, right? Bitcoin is in a bear market, not likely to see new all-time highs this year. The cycle is likely, just looking at a lot of metrics already, being below the 50-week moving average, looking at things like the relative strength index is it went from overbought to oversold. Looking at things like, the risk level, we went to the highest risk band. This is where I took profits and really struggled to do anything useful over here in terms of taking profits just because I had already done it. And then also the other thing is looking at things like the running 1 year ROI. Like look at the 1 year ROI. I mean, if you think about drawing a line through this, like that's why I think that the early 2021 peak was the more significant peak. Ever since then, we've just been in a bear market, and I'm sort of waiting for this thing to bottom and then for us to ultimately start a new trend. Okay, that's where I currently see things. I think Bitcoin dominance is going to go up as well, so be careful with altcoins. Bitcoin's likely going to stay in some trouble for a while and be in a bear market while the dollar continues to rally and the Fed remains hawkish because of inflation. there you have it. That's the macroeconomic outlook and where I see Bitcoin heading over the next several months. Holding the summer lows at best, more realistic 20 to 25K. Worst case scenario, we go slightly sub 20K, and then we ultimately build out from there. And if all that happens, you're certainly looking at a new cycle. And by a lot of metrics, you already are looking at a new cycle in terms of where we are with respect to, say, like the 50-week moving average. We're below the 100-week moving average, etc. All right. So unfortunately, it does not look like the lengthening cycle theory will prevail from as measured from market cycle bottom, which is what we developed it from. I mean, if you sort of overlay this to the next bottom, it sort of looks like we're in this phase right here, right? And then, I mean, it did lengthen from the halving, which I suppose is something to keep in mind for the, for the next cycle, but it only barely lengthened from the halving, not by a consequential amount. So I think we'll go ahead and wrap it up there. Thank you guys for tuning in. Make sure you subscribe. Remember, I mean, I know a lot of people are really worried about the current markets. To be completely honest, you might just want to, I don't know, tune out for a few months and then come back. It's not going to go anywhere. We'll be here every single day for the most part. And I wish I could bring you better news, but it's just what it is in the short term. The markets look bad. And with Bitcoin continuing to push lower with traditional markets, I think we're better off just saying it's going to be a new cycle. All right, guys, I think we'll wrap it up. I'll see you guys next time. Bye.